SCHD is a popular dividend ETF from Schwab. VOO and VTI are broad market index funds from Vanguard for the S&P 500 and total U.S. stock market. Let's compare them. We can compare SCHD to both VOO and VTI simultaneously, as both VOO and VTI are representative of the market in the U.S. and their performance is nearly identical. VOO seeks to track the famous S&P 500 index, the 500 largest publicly traded companies in the U.S., and VTI tracks the entire U.S. stock market. I compared VOO and VTI in a separate video here. SCHD, the Schwab U.S. Dividend Equity ETF, is a narrower segment of the market than VOO or VTI. The fund is a very popular dividend ETF from Schwab that launched in late 2011. SCHD has a little over 100 holdings and it aims to capture companies with a reliable dividend history and robust profitability. Its market cap weighted index is the Dow Jones U.S. Dividend 100 Index. Though it may appear so at first glance, SCHD is not just your typical simple dividend fund. It uses fundamental screens like ROE, dividend growth rate, and debt to equity ratios to identify high quality companies and thus provides appreciable exposure to equity risk factors like profitability and investment, as well as non-trivial exposure to the value factor. VOO is the Vanguard S&P 500 ETF, and it's one of the most popular ETFs in existence. Established in 2010, the fund seeks to track the market cap weighted S&P 500 index, holding over 500 U.S. large cap stocks. This index is considered a proxy for the U.S. stock market. VTI is the Vanguard Total Stock Market ETF. It was established in 2001 and seeks to track the CRSP U.S. Total Market Index. VTI provides similar broad exposure to the U.S. stock market, but also includes small and mid-cap stocks. Specifically, about 82% of VTI's 4,000 holdings are large cap stocks, 12% are mid-cap stocks, and 6% are small cap stocks. Thus, VOO is about 82% of VTI by weight. Sector weightings are naturally very different for SCHD than for VOO or VTI. Notice how SCHD heavily overweights consumer staples, financials, and industrials relative to the market. These sectors are notorious for reliable dividends and strong profitability. Also note how SCHD has zero or low exposure to utilities and real estate. As such, SCHD alone would not be considered sufficient as a core holding for a well-diversified investment portfolio, and should probably only be used to tilt or overweight high-quality dividend-paying stocks in one's portfolio. This may be attractive for dividend investors. I'm not one, but I did design a dividend-focused portfolio that incorporates SCHD as its primary holding. I've got a link for that in the description if you're interested. Going back to 2011 when SCHD launched, VOO and VTI have beaten it handily with only slightly greater volatility. Though all three of these funds are highly liquid and very popular, Vanguard's VOO and VTI are much more popular than SCHD, with over $550 billion and $900 billion in assets respectively, compared to about $36 billion for SCHD. SCHD has an expense ratio of 0.06% or 6 basis points, while both VOO and VTI are cheaper with an expense ratio of 0.03%. Investors seeking broad diversified exposure to the U.S. stock market should use VOO or VTI as a core holding. SCHD only looks at high profitability companies in the U.S. with a reliable dividend history, and is thus likely better suited as a dividend tilt for those looking to use dividend yield as income, or those who want a somewhat naive yet non-trivial tilt toward equity risk factors like value, investment, and profitability. VOO and VTI have outperformed SCHD going back to SCHD's inception in 2011 and are also slightly cheaper than SCHD. Conveniently, all these funds should be available at any major broker. Do you own any of them? Let me know in the comments. Thanks for watching. Some of the links below are referral links at no additional cost to you. If you choose to make a purchase or sign up for a service, after clicking through those links, I may receive a small commission. This allows me to continue producing high quality content on this channel and pays for the occasional cup of coffee. I have first-hand experience with every product or service I recommend, and I recommend them because I genuinely believe they are useful.